Hey guys, welcome to mentfx. This is the 5th episode in the mentfx masterclass following the liquidity video. And since we just got very deep into liquidity and explained it in the form of where orders in the market might be resting, right? In the form of maybe when we consolidate, we have support and we have resistances, we have trend lines build over time. So market wants to move in the direction of those trend lines and oftentimes create, ideas of potential head and shoulders for people to want to sell. And wherever orders are laying is usually where liquidity lies, okay? So that's what the previous video where we got very deep into it and did a lot of replay tool ended. And we just basically discussed that liquidity is where orders lie in the market, okay? Now what we didn't get into and what we are going to begin getting into now, which is a little bit of a higher concept, but it's still within the liquidity realm, is all inefficiency, okay? So not only are orders in the market or swings in the market, right, because that's where most likely people are looking to buy and sell, seen as liquidity, but also areas of inefficiency like volume imbalances, fair value gaps, liquidity voids, whatever it is that you've learned for the terminology for it, and order blocks and breaker blocks and kill shots and snipers and all those other things that you might have learned about elsewhere are all forms of inefficiency. And inefficiency is a form of liquidity. And what that means is price is also magnetized to those areas, and price wants to make its way to fill those areas, right? So for instance, this small little bit of knowledge will now start to give you an even bigger understanding of why price moves the way it does, right? So if we just look at this move, for instance, this in some people's minds is a liquidity void, and some it's a imbalance here, an imbalance here, an imbalance here, and an imbalance here, right? Either way, whatever you want to call it, and some people call this a fair value gap, and other people will know that this is a breaker block, and other people will know this is a mitigation, right? There are tons of things that is known as, but the ultimate thing that we have to understand is these areas have become important, and we are now noticing these areas because we recognize that the banks are getting involved at these areas, right? So when the bank, for instance, got involved here and moved the price substantially higher very quickly, we created a void or an imbalance, whatever it is you might want to call it. So when we came into that area, that's why we came, because we came to fill this area, right? We saw some movement away as we filled in this, saw some movement down, just began to play around in this area, and you'll notice that everything that was ever created was filled. So there was this small area created right here and this small area created here before that got filled by this move, that got filled by this move, and price ultimately consolidated to get filled in at all these areas before dropping down to fill about 50% of this, hitting this mitigation, and continuing higher, right? Creating what? This huge imbalance that got filled now, creating what? This huge imbalance right here that now got filled, creating what? This huge imbalance right here that just got filled, creating what? This huge imbalance right here, which we can most likely anticipate is going to be filled in a second, right? So generally, what you have to understand is that liquidity is seen in two ways. It's seen as where are the most orders lying and where was price inefficient. And inefficiency encapsulates all those ideas that you might have learned before, but also that are part of the whole institutional order flow rationale, okay? So this video is going to be dedicated specifically towards order blocks. If you go to my channel and look at some of the videos there, you'll notice that we got very deep into an order block and explained specifically why, when for instance price is doing this and gaps down and continues higher and then retests an order block that's created here, we get specifically into why this happens in the form of how there are orders that are lying here that are stop losses, orders that are lying here is people that are looking for those continuation breakout trades, and ultimately the big bank, the smart money, the competent man comes in to grab those orders before taking them significantly higher, right? But to grab those orders, they have to sell into those orders. So when they do that and leave that area, they create an area here where they're negative on their trade, right? So when they come back to this area, they do it to exit their negative positions. So they exit their shorts, and now all they have is just a bunch of longs, right? They just have all these longs that they capitalized on here, and all the way in this consolidation, so that they can now take price higher, kind of relatively risk-free, right? So the idea is they've gone ahead, they've exited all their shorts, and now they continue higher, right? This is the ultimate look of an order block, and you'll most likely have learned that an order block looks like this. It's a down candle, followed by a huge up move after price has most likely created some kind of, area of liquidity here and here, so that we can grab that liquidity, continue higher, mitigate that area, and then continue substantially higher. Okay, so what we're going to do is we're going to look at a few examples. Of course, this is the replay tool, but if you want to see live examples or live analysis, please either take a look at some of my other videos where I analyze for the week, or I will be doing some live streams in the future. Okay, so like I said, we just looked at this area, recognizing that we had this huge move away, and we've been filling in all this inefficiency thus far. We'll get into imbalances and fair value gaps and liquidity voids and all that other good stuff in the future, but right now we're going to focus on order blocks, right? So when we look at this, I know that an order block does form here. Okay, so what happens here is we create an area of liquidity, right? So we have created an area where people want to buy. And we also, from a while back, created multiple order blocks, right? So we had these areas of support that we broke through to continue higher, came back down to mitigate this order block, right? So if you start thinking about what we've been talking about, this was that move down that allowed banks to start buying. When banks bought, they can't just continue higher. What they need to do is they got to get out of their negative positions. So they brought price back down, getting out of their negative positions and continuing significantly higher, like this. And as they did that, what they did is they've also mitigated an order block by creating an order block. So when price comes back down here, it's actually hitting and filling this order block where they sold as well to mitigate out of those positions to continue higher. But what's interesting, as you'll start to notice, because this is a pattern and it continues to repeat, is that when we came to grab this order block, we created a new order block, right here. So it's another propulsion block, and this block was formed when we decided to go much lower under all these lows, right? Because on a lower time frame, what does this price action look like? Well, it looks a little something like this. So people start trading potentially this support, come lower, create this support, people start trading that, we come right through it, and we continue higher. And that's ultimately what is seen right there, okay? So the idea is we are going to anticipate that the market makers, or whatever you want to call them, are going to want to come eventually in the future to mitigate the positions out of this trade to either continue higher or then continue lower, right? Depending on where we believe liquidity lies. So right now we also know that we have this area of inefficiency that we need to fill. And what you'll notice is this whole thing here is actually a huge order block, but we don't actually have to talk about that right now. Let's just look at this order block and understand what's going on. So banks sold very hard, now they're buying. So let's see what happens. Okay, so what you'll notice is they came back down to this area to mitigate out of some of their positions that they sold to take price higher. So now they can start taking profits, right? And as they're doing that, notice that they're using these prices to start fill in these imbalances. And as they're doing that, what you'll notice is they're creating more imbalance here, right? So most likely we can see some of this get filled before it continues higher. So there we go. We come and see some more inefficiency filled here, and we start making our way higher. As we start getting in here, we're going to do what? Most likely, we're going to, create that trap move, create that liquidity. Potentially, retail-wise, we're going to create some neck to some head and shoulders before we continue higher. We don't know. Maybe we just buzz right through it. But let's take a look, okay? So there we go. We get some rejection, right? This right here, for some people would be considered an order block. It's not, right? This move did not take anything. This move is just a part of what's happening in price action. We're just looking to fill inefficiency or create liquidity for the future, right? So we're coming higher. We're coming to fill the inefficiency we're starting to create, right? This was an area of imbalance. Just filled that, right? Now we can just keep watching price. We've just came to grab some lows. So on a lower time frame, this starts to look like a good low. We grab those lows. So what can we expect prices wanting to do right now? Come higher, right? Because all it's done is it's taken orders where people were having stop losses and sells under here, grab those orders to come where? Most likely higher, right? But we're still expecting that price wants to come eventually into this area to mitigate out of those negative positions. They've mitigated once, but that's not, they're not always going to just mitigate once. Sometimes it's very relatively large positions and they can't just exit them in one go, okay? So price begins to play in and around this area, creating what appears to be a trend line on a much lower time frame. So what can we expect price is going to do? Potentially drop down and shoot up through it, most likely, right? So okay, so we have I did not know this was going to happen, just so you guys know. You don't have to believe me. I do this all the time with my clients as well. But we drop down, why? Because we're collecting liquidity on the bottom side, making people think that they're about to miss this huge move down, right, to this trend line or whatever. So people are going to start selling before we continue higher, most likely. Okay, so we start coming higher. We make a high above these. We start coming higher, right? So now what we're doing is the banks are buying into these areas here to take out what? All the liquidity that rests here, right? So these are people that are now trying to trade this resistance. So when banks end up buying this, they're going to go into they're going to do that because they want to collect all the positions here before they take price lower to get rid of their positions in here, right? So let's take a look at what happens. So they actually come lower first to grab what? More liquidity here. Most likely looking to come higher. Okay, so now what they've done is they've bought extremely hard into this position to do what? Grab all the stop losses and the buy stops above this. So maybe we come a little bit higher before coming down, right? And once we drop back down, this area here will become an order block. Why? Because they bought into this move to grab liquidity. Okay, so let's take a look at what happens. So they could buy even higher now. Okay, so they do. They actually create more liquidity and buy even higher. And they could come even higher than this before coming back down, right? Okay, so they actually do. So they buy into this move to come even higher. And now they might do it again before. So they're creating what? More liquidity up here. So most likely they're going to have one more move up here, which is actually going to be in line with a distribution schematic before they come lower, creating an order block here. So let's see what happens. So we do have that small move higher. We want a kind of a bigger one, so that's somewhat decent. There we go. That's a nice move. So what you'll notice is now, what was the point of what happened here? Okay, so the point was the banks came significantly higher to grab everything that rested above all these areas. Now, as people are starting to buy and see this uptrend, they're going to start selling. Why are they going to sell? Well, one, they took all the orders that rested up here, and they need to still mitigate the positions in here. So most likely price wants to come and grab the positions here and then continue higher or continue lower. We don't know yet, but let's take a look. So price comes back up to start mitigating this area. So you notice that they're coming up here to do what? Start to mitigate all the buys they already took here, okay? And then they have a huge drop off, okay? So when they do this, they haven't mitigated, well, they might have, but they haven't mitigated all their positions here yet, right? So this is the last move up. So this is that move up before that huge down move. So most likely they could come back up here for a second to mitigate more positions before dropping, right? We don't know. They could just drop into here, mitigate their positions, and then come higher to mitigate more positions here, right? But the idea is we would now be, okay with maybe taking a buy here. And on a lower time frame, we could be getting into a very nice buy. This is only 1 to 4. We usually look for a lot higher. But the idea is we'd be waiting for price. There we go. So you see this. Price came to mitigate at this area again. So what we could do potentially is look for a sell from in or around this area. So let's just be fair and do it at market. Potentially a stop loss just above the highs where people were trapped, just like that. Take it way lower, right? So that's only a 1 to 3. But the idea is we are trading this because we know that we bought here to trap people, to take their orders so we can take them lower to do what? Unfold our other orders at where? An area of liquidity, also known as an area of inefficiency. And how do we find inefficiency? Through imbalances and through order blocks, which is what we're looking at right now. We'll get into imbalances, so like this area right here is still a little bit of an imbalance later. So we do want to make our way down here. But how are we going to do that? Let's watch. So we do make our way down there, and potentially now we could be looking for longs here if we wanted to. So we were looking at this too. To what? Maybe come even higher, right? Because we're generally bullish in a not a trend line wise. We're bullish in a order flow wise. Sometimes you'll notice that order flow will line up with a trend line, but what you'll notice is even though it looks like a trend line, this is actually a trend line break. So a lot of people would be going bearish now when we are actually going bullish, which is actually perfect for us too. So let's see if we ever do drop into this area right here. So we're slowing down because we're starting to mitigate positions that we sold into from all the way back here, right? Because this last sell wasn't the only sell. It was also back up here. So we're playing in and around this area. Potentially we don't even get back down there. Oh, and there we go. So we sell back into here. And what did we do when we did that? Well, we now have, it looks like we've created a potential trend line, right? So what can we expect? Well, we know that there's liquidity above these areas, and potentially above these areas. And we also know that potentially banks have not mitigated out of all of the trades or all the entries they've made when they bought here to sell hard, right? So we could enter a buy here knowing that we need to mitigate in or around these areas, right? So when we do that, you'll see that price touches this area a few times, right? And again, this last sell And this continuation up is actually a very big order block, right? So now we can get into the idea of this being a huge order block. So you could be looking for re-entries in this area if you really missed this trade, right? We don't know if it'll come back in there, but let's just take a look. So it does. So it actually wicks this area, and then we can expect price to want to come higher to these order blocks, right? Okay, so what are we doing again, right? Let's consider. So maybe we've already taken some profit, but the idea is look what we've created, an area of resistance. So people are most likely wanting to trade this. So when I ask you the question that I asked you in the last video, where are most orders most likely resting? Probably up here, but also maybe in this trend line. So maybe what can we expect? Maybe trend line gets broken, and then we come take out those orders. Let's see. Okay, so trend line does get broken, and then we come and take those orders. Okay, so it looks like I've looked into this, but in reality, we just played a bunch of price, so I could have studied every single move before I made this video, but I didn't. Either way, go onto a chart, look at it yourself. You'll start to notice areas like these get held. We make our way back up, filling in this order block. Potentially, we want to be looking for sells here, but based on how hard we're moving through it, we're actually going to look for most likely some kind of move down before we continue even higher, okay? So we don't even get that move down, a very minor one, and we just continue higher, okay? But when we did that, we also left this huge order block here. So in the future, this area could be of interest to us, right? And we could watch it, okay? And as we're moving up, what you'll notice is we're coming to areas that would be considered resistance. So we could now potentially just see small movements down before continuations up, right? So small movements down before those continuations higher, right? There you go. So stuff like that. Generally, I wanted to make this video because I wanted to explain the concepts of order blocks, right? You'll be able to see order blocks in many areas. You're going to get order blocks wrong sometimes. As you begin to get better at this, you'll notice what areas constitute order blocks and what areas do not. Order blocks are an example of inefficiency. Market wants to move to those areas of inefficiency because it needs to fill in at a fair price. And banks will need to come to those areas to mitigate, right? So we just looked at how this order block became this order block, became this order block, which then became this order block, right? This down move to the upside, which then became this order block, which was held here, which then became this order block, which might be held in the future. We can't be sure, right? This is why we learn other things like Wyckoff, like imbalance, and we start to pair those things off, and we start doing order flow from top-down analysis, and then we tie that with risk management to create an ultimately undefeated system, and one that we can put our full trust in because we start to understand the reasoning for lots of moves. Okay, so I hope this was very helpful for those that are looking to learn about order blocks and trying to get deeper and understand them. Right, even when you open up a chart, even like right now, you'll notice that order blocks are being respected. So consider this area. We are coming down, creating lower structure. This is the last example we're going to have before I'll have to sign off, but creating lower structure. This move up is ultimately a move through some highs on some lower time frame, creating this huge order block right here, okay? Now, even if we don't see that, let's say we don't, price is continuing lower, comes up, comes lower. What is it now created? In a retail mindset, this is an engulfing. So as a retail mindset is looking to go even higher here, most likely. At the same time, we've created what? An area of potential resistance. So people retail-wise are either selling here and then looking to buy here. So you see already how it's fully just against them in this case. What happens is the banks buy into this huge position right here, taking out all these highs before selling off below all these lows right here, creating this area, which is now considered an order block. So when we come lower here and we create a fake high, we come to grab it, right? Accumulating even more positions to the downside, doing what? Filling in the order block that we just created to do what? Continue even lower, right? So this would have been a potential entry for you. So thanks for watching, guys. That's how you guys spot order blocks and efficiency in the market. Next time we'll look at potentially imbalances. Thank you.